Hey guys!
Is a buy-to-let investment still worthwhile in this current year?
Yep, we reached out to some of our friends who are buy-to-let investors to get their perspectives on whether they are still investing in buy-to-let given the current climate with rising interest rates and so on. So for today's video, we're going to make it super fun. We're going to be sharing exactly what they sent us on the WhatsApp messages so that you guys can get a glimpse from people who are doing this type of investing. Does that sound good? If it does, we'd appreciate it if you hit that subscribe button to our channel.
All right, so let's read the first response.
Yep, let's get started.
And
so what was the first thing? So the first person was someone you know.
Yeah, my good friend.
A really good friend.
Very good friend. So this was her response to our question. It's always a good time to buy an investment property if the following have been considered. 1, the considered investment is a good purchase, and by good purchase, I mean below market value or added value can be gained.
So that's interesting. Let's pause there for a sec. So what she means there with below market value, because at the moment, the property market in some parts of the UK, we've seen some declines, and in some parts we haven't quite seen declines, and some more declines are expected.
Yeah.
So I guess what she's really saying here is really negotiating really as best you can, trying to find a really good deal.
Exactly. Obviously, where she said or added value can be gained, it would be either buying like a distressed property and then doing it up, so gutting it out and then just like redoing it.
Right. Okay.
So what else has she said? 2, you have a multiple exit strategy. So multiple markets you can let to, multiple ways the property can gain an income.
Interesting. And to that point about multiple markets you can let to, so it's not just a traditional buy-to-let, it could be that you potentially do like a HMO and stuff like that.
Yes.
Or you can let to other markets, maybe to a young family, or the potential to let to maybe professionals, and so on. So what's the next thing she said?
3, the cost of borrowing makes sense against the ROI.
Big one.
Yes. 4, you have a long-term investment horizon.
That's huge in property.
It is.
I know sometimes we say it a lot on this channel, and it sounds really obvious, and it sounds like we're just labouring the point, but it's actually really, really important.
Yeah, so this isn't a flip or buy-in with the hopes of like selling it in a few years down the line. Just think of it as long-term and hold on to the property for it to gain value over the years.
Although, if you did find a flip, it's not a bad thing to do if you can find a way of making money short-term if the numbers make sense for you. Yeah.
5, you have done your research on the area and the market is not already oversaturated. 6, you're not overstretched and have got a buffer. If for any reason the property was vacant for a few months or needed repairs, so important.
Do you know what? This is a huge one because with what's going on right now, the thing she said about like if the property is vacant, although like rents are crazy at the moment, like rents are going up because interest rates are rising and landlords are passing on costs onto tenants as well. Rates are just rising, inflation's, everything's going up. But the point is, like, this point about not being overstretched is super important because cash flow is super important in this time. Just the ability to just withstand, like, changes, rising rates and that kind of stuff.
Absolutely. So in conclusion, she said, personally, I think due to the current cost of borrowing, it is a buyer's market. And so there are several deals to be had. However, depending on where you invest, your ROI and monthly cash flow could be lower as a result. So location is very important. The key, therefore, really would be buy-in below market value, which then increases scope for higher profit margins.
Okay.
Thanks so much, my love.
Obviously, ROI makes sense for return on investment. And simply, it's a calculation comparing how much you actually put into the property compared to what you're getting back every year. So, okay. So the second one was, I texted another friend, and this was someone I've known for a long time, really good friend of mine. And we asked the same question, is a buy-to-let a viable option at this present time? And his immediate response was, and you see this on the screen, is, yes, it is. I'm actively negotiating on multiple properties at the moment. I just put in an offer today. Rates have come down, but it's important to get a good price.
Okay, so he's not slowed down at all.
No.
He said multiple.
Yeah. So that's really interesting because we then asked him, I went back further and said, oh wow, like I was really quite surprised that, because it's we're doing this at a height of rates are rising, and a lot of people have been put off, but this person is obviously a professional investor. So I went back to him and asked him further and said to him, like, how are you making sure that the deals are stacking up? Go into a bit more detail, to which he then shared this audio, which we're going to now play for us to listen to.
All right.
Okay. So the rates I'm getting, it varies depending on what kind of deal it is. But if it's just a normal buy-to-let mortgage through a limited company, I'm now getting about 5.5%. If it's something more complicated, like an HMO, then it's going to be more. And then if it's an Airbnb mortgage, even more. So I've just applied for an Airbnb mortgage, and that's 6.9%. And then the HMO, I think, was like high fives, low sixes. And then are the deals stacking up? Yes, they definitely are. But the deals I do now are, aren't your standard buy to let. So I'm currently looking at a severely dilapidated ex-Georgian kind of building that needs about £150,000 worth of work to it, and that would need a full gut and refit. And because the uplift in value and the yield on an Airbnb basis is so high, that the interest being a couple of percent higher than it was 6 months ago ultimately doesn't really make that much of a difference. I think where it's going to hurt you is if you're just buying a standard buy-to-let, relying on a kind of moderate ROI on rental cash flow before mortgage rates going up is going to absorb a lot or most of the ROI there. So, in summary, I think it's still great to do business. You've just got to do something a bit more interesting that ensures you're getting a stronger return that can absorb, at least in part, that mortgage rate increase.
Interesting insights there.
Yeah, really powerful. And one thing that stood out for me, just listening to that, is that it's clear that the people who are going to do well in this season when it comes to buy-to-lets are actual professional investors.
Yeah, people who have been doing it for years, and they know how to work out, a good return of investment in, like a good investment, a good deal, and they've got all of that experience that they can then apply to a more unusual purchase, like this one, a complex one, which is in his case a dilapidated old property,
and they've got access to capital.
Exactly, you'd need a lot of money to do that.
Yeah, because you just mentioned
150k to do it up,
and just doing it up. That's not even like acquiring the property and all of it. So it's quite a lot of complex. Like working out, is this worth my while? How much time have I got? How much money do I need? What are my returns going to look like? What's my horizon? And to your friend's point earlier, what's my exit plan for making this investment?
Yeah. And one thing to consider with that as well is that if they're literally gutting out the whole property, then one thing we need to consider during this time is that materials, everything has risen.
Inflation.
In costs. If the parts, materials are way more expensive than they were maybe a year ago. So that's something that one would need to factor in if they're like redoing a whole house
and whole property.
Yeah.
And the final point he made is obviously he's looking for unusual deals. Really unusual things, which means he's looking for the opportunity to drive a hard bargain. Negotiate hard, get it significantly below proposed market value, and then do it up.
Add value.
So again, this all speaks to experience. You really need to know what you're doing. And I guess this also speaks to risk, because if one person's doing this, then all those elements, it could be too much for one person to really consider. So you may be asking yourself, how do I reduce my risk right now?
Yeah,
you know,
so one thing they could do is a joint venture.
A joint venture,
with somebody
exactly.
else that they trust. That's an option.
Because then you're reducing the potential of it just being a disaster, but also reducing your, you know, your required capital, because that person also has to bring something to the table, whether it's money or experience or skill set or whatever. They're bringing something to the table, so you're overall reducing costs and reducing risks in a way. So really powerful insights there from him. Do you want to read our last one? This last point.
Okay.
Again, we asked the same question.
We asked the same question, and again, a very good friend for many years, and he said, yes, it's still a viable option. Lots of investors bought property when interest rates were at 5.5% to 7%. So the recent interest rate rise is not catastrophic. It's bearable. People who are over-leveraged will struggle.
Exactly, and this comes back to the first one you read out. She made the same point about like
not overstretching
yourself, which in this world, property it's all about the leverage. It's about the bank's money. So in simple terms, it's the ratio. How much you're borrowing compared to the equity on a property. So this is actually a really powerful point about not being over leveraged. You need a lot of equity in your properties to be able to negotiate better rates. That's really the point.
Exactly. And again, he's also saying it's still a viable option. So they're all saying yes, but it's just under these circumstances, you know, we would conclude by saying you would need a lot of money to get into buy-to-let venture. And you would need to do something quite unusual, which is what they were saying. So whether it's a distressed, dilapidated property that you gut out and then redo, and then once you've added value, you'll then increase, you know, the price of the property. And you might want to consider a joint venture to reduce your risk, reduce the amount of costs that you put into this venture, and, you know, what else?
And also you need to think very carefully about what strategy you're focusing on. Whether it's the vanilla buy-to-let strategy, or whether it's you doing Airbnb, or whether it's you buying and flipping and trying to sell, or whether it's that you're focusing on capital appreciation for the long term, like you're saying, do you know what? I'm only going to buy in like cities, and my thing is just capital. I'm not going to care about income. I'm just going to focus on capital, and that's my strategy. And in like 10 or 20 years, my thing would have appreciated significantly. I'll sell up, get my money out. You know, just think about that very carefully. And the final point is structuring. You talked about this earlier about, you know, whether you do it in a limited company structure. If you've not seen the video we've done about that, it's super detailed. An interview we did, we'll link to it below, as well as above for you to go and check out. Or whether you do it under your own name. All this speaks to just making sure that you are compliant, you know, you're doing all those tax related things. You're just making sure that you're doing things how you're meant to be doing them. So a lot to consider.
Lots to consider for sure, but people are still doing it. If you were wondering, but it does, you know, it requires a lot of thought, and, you know, planning, experience, money. Lots to consider. But let us know in the comments. Do you think? Are you considering getting a buy-to-let investment this year? Is this something you're working on last year and you're still planning to do it this year, or are you do you have any reservations?
And one thing to add, by the way, you talked about, because there's a lot of complexity. One thing that Mary and I run is a property mastermind inside of Financial Joy Academy.
Yes.
Just worth mentioning that, because one thing we've personally found is that having a community where you talk about stuff like this, and you're not trying to all work it out in your head, but you hear other people's experiences, and you may even explore joint ventures with other people and stuff like that. It's actually a really powerful resource to have, because then you're hearing what strategies people have done, you're hearing about their failures, their successes, you're even asking them like, who's your mortgage broker, you know, that kind of stuff. And you may even find a joint venture opportunity that Mary talked about earlier. So if you're interested in that, we run Financial Joy Academy, which we'll link to below and above for you to head over, read about it, check it out, and if it's for you, join and we'll see you inside the Financial Joy Academy.
Absolutely. Guys, thank you so much for watching this video. We hope you found it useful. Do share it with somebody who you think will gain value from it. Like, subscribe, and yeah, if you haven't subscribed, please do it now.
Thank you so much, guys, for watching today's video. And as we say on our channel, as always, in all things, be thankful and seek joy.
Take care,
people.
guys.
Bye.